I'm recording this audio lesson to give you more explanation about the practice exercise and as a review of adjusting entries and closing entries and recording everything on the worksheet. When you're completing the worksheet with the adjusting entries, the entries go in the adjustments column. You always start off with the trial balance, that is the balance in the ledger accounts at the end of the year. Then you do the adjustments. You want to make sure that your adjustment columns balance. Also, oftentimes there are adjusting entries that require accounts that are not in the trial balance. You have to add these accounts to the bottom of the worksheet. Once you have recorded the adjustments and balance the columns, then you start transferring the amounts over to the income statement and balance sheet. Sometimes the worksheet will have an adjusted trial balance on it. So in this case, you have $6,600 in cash, no adjustments, so it's $6,600 debit on the balance sheet. For allowance for doubtful accounts, you had a credit balance of $80, another credit of $40 for the adjustment, so your adjusted amount is $120 credit, and so it's $120 that goes on the balance sheet. So you continue this format all the way down to finish off the balance sheet. Then you transfer your revenue accounts and expense accounts over to the income statement columns. Bookkeeping fees earned was a credit balance of $74,000, another credit, so you add to get a credit balance of $74,950. So on the income statement, that is the $74,950 is what you transfer over. Once you have transferred the amounts over on the income statement, then you total both columns, you subtract the two columns and put the difference on the lower side. So take $99,350, subtract $80,050, that gives you $19,300, and that is your company's net income. You need to indicate over to the left that it is net income. Add up both of the sides and they should balance. Since it's a net income, it gets added to the credit side of the worksheet, and you have to balance both those columns as well. You can see it's also the smaller side on the worksheet columns. Once you have completed the worksheet, then you have to journalize the adjusting and closing entries. Just by recording the adjustments on the worksheet doesn't get them into the accounts. You have to journalize in post. So all the information from the adjustments on the worksheet gets journalized, then you do the closing entries. Remember, there are always 4 closing entries, and you're closing all the accounts on the income statement into income summary, then you're closing income summary into capital and drawings into capital. So the first entry, you close your revenue accounts. There are 2 revenue accounts, and so you're going to debit both those revenue accounts and credit income revenue and expense summary. You'll notice the credit to revenue and expense summary is the same as the credit column on the worksheet for the income statement. Then you're going to debit your revenue and expense summary, the amount that is the total of all your accounts on the income statement. Don't forget to add your other accounts that you've added to the bottom onto your income statement, because those accounts were all expensed. So you're debiting revenue and expense summary for the total of the debit column on the worksheet, crediting all your expenses to bring them down to 0. The balance in your revenue and expense summary is the difference between $99,350 and $80,050, which is your net income, which is $19,300. So that's how we get the net income into capital. And the last entry is to credit drawings, because it has a debit balance, so you want to credit it to bring it down to 0 and debit capital. After you've posted these closing entries, your revenue and expense accounts and drawings, all your temporary accounts, will be down to 0 to start the next accounting period. I hope this helped you with activities 7 and 8.